Hey guys, welcome back to another video. I hope you guys are having a great day. The weekend is here and natural gas is again under the fire. The next week's trading session will be quite interesting. Lawmakers urge Biden admin to permanently ban rail shipments of liquefied natural gas. Now, keeping in mind that US was the largest exporter of liquefied natural gas inside of 2022, if it becomes harder to actually transport it around the country, importing and exporting will become harder. Will this have a positive or a negative impact on the price? Before we get into all of that, if you guys are here for the first time, you do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button. While you're there, slap a like on the video for the YouTube algorithm so everyone can be up to date with the breaking news of natural gas. Now, keep in mind that going through the railway route was not a big deal back in the day until Trump actually came into presidency. Warning of risk of explosion along a densely populated route, the representatives from the Pennsylvania asked a federal agency to finalize a rollback of a Trump-era rule. Obviously, they just wanted to make it a little bit easier for making the route and making it much easier to transport the natural gas. But seeing the route it takes, it is very explosive, and on the other hand, it is going through a very populated area, so there is a risk of a lot of people's lives, and that's why they're trying to pull this back. But keep in mind, if this is passed in the parliament, why is this a bad thing for the price of natural gas, and why is it a good thing? This will make it a little bit harder to import and export natural gas in specific areas. It will take a little bit of time for the transportation to be able to make it to the specific location, which will be very interesting to see how it will play out in the near future. 7 members of Pennsylvania delegacy have urged the U.S. Department of Transportation to permanently ban the shipment of liquefied natural gas by rail, arguing that a plan to ship the highly explosive fuel through their district to proposed export terminal in New Jersey is just not great because it has some very big impacts. Now, this decision was actually made by the Trump admin, and obviously the Biden admin could have a small change, but if this is passed, it is obviously going to have a strong impact on the price of natural gas, as seeing that US is the largest importer and exporter of natural gas inside of 2022. Another thing which is really interesting is as coal declines, oil and gas emerge stronger than ever. And what are they talking about? In one, utilities are rapidly closing the coal plants, with consumption of fossil fuel falling to the levels not seen since a very long time. In the other, American oil and gas drillers are on track to set new pumping records driven by high demand at home and abroad. Now, keep in mind, this shows that obviously coal prices will be pumped up because the plants are closing down. The demand is still the same, but the supply will be dropping. But on the other hand, oil and gas are setting new highs and the demand is still the same, so it will have a negative impact on the price. Same idea goes here. The demand is the same, but the supply is starting to increase, so the price will drop. You do need to understand that this could be for a short period of time. As you know, we talked about how Wall Street suggested cutting down on the supply of natural gas to be able to put the price in the middle zone. So if that goes through, obviously that will have a very positive impact on the price if you are holding it long. If you're shorting it, that's obviously another story. Another thing you guys need to see is on the 1-day chart right now. If you look at the Fibonacci extension, you can see that right now the only resistance that we will have to worry about is about 400 points above where we are sitting right now, which is quite hectic because that's close to a 40-cent increase before we see any sort of strong resistance. And you can see that this resistance is going to play a very crucial role because it has been tested and also been used as a support in a lot of previous times, especially around the January time in 2023. It was actually used quite significantly, so obviously it is going to be playing a very crucial role. But until that zone, you guys can see there's not much of a resistance. And the uptrend that we talked about, just a singular day on Friday, we finally closed in the uptrend. and the downtrend, which actually started nearly last year of December, has finally come to an end. And let's just say that this uptrend will carry on if there is nothing slowing us down, but that will only be for March, because by the end of March, let's just say if the weather decides to flip against us, it is obviously not going to be a great deal. Another thing which is really interesting is Yahoo Finance actually made a post yesterday, natural gas and what you need to know about it, the most crucial fuel that is required in the world right now. Now, if you do decide to do where they can be found, only thing you need to know is they can be mainly found in America right now, due to the fact that Russia is not providing it, but America is importing and exporting quite strongly. What is natural gas? It is obviously used for heating, power generation, and transportation, manufacturing. This is just a very good post for the people who are trading natural gas but don't actually know much about it. I'm not going to spend much time on it. I just want to show you guys that that is a very good place to look for some information. Natural gas closes about $3 first time since late January. Investing.com, in markets anti to Newton's law, what goes down must come up. Natural gas futures are doing just that. It rises 23% just this week, and now there is no stopping it because there is not many resistance that will be stopping it from making it all the way to the $3.50 mark right now. The weather forecast shifted cooler from yesterday, with the middle of the March forecast expected to be 10 degrees cooler than the 10-year normal, which is obviously going to be favoring the long holders and also the people who are buying into natural gas right now. This is really crazy deal, because obviously the natural gas price would have not been super high, and obviously if the cooler pace did not come in at the right time, it would have not been the best thing. The week ending March 17th is expected to be the coolest since early February. Now that means in the middle of March, that is going to be the point where you will be able to see natural gas pump the hardest, as more people will be requiring and the demand for natural gas will go up. The new signs of demand, slower output, drive natural gas futures forward. Cash prices are cascade. Natural gas futures on Friday higher for the 4th time in the week and the 7th in the 8th session, powered by the forecast for stronger heating demand arriving just production is easing. The April gas futures contract settled at $3. Now keep in mind, right now the demand is going to slowly go up, but when we get into April and let's say with the weather starts getting a little bit warmer, it might actually start falling down very quickly as well. So if you are trading at a high leverage, just be a little careful and also make sure you do some risk management, as you do not want to lose out on a lot of money. If your leverage is over 100, you could be in a lot of pressure when the natural gas prices will be fluctuating, as it will be extremely volatile in the coming weeks. Other than that, I hope you guys did enjoy today's video. If you did, drop a like on it. If you're new to the channel, do want to stay up to date with everything, subscribe, and I will see you very soon. I'm out. Peace.